Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. We go live twice per day. This is the first session. We'll be back again at 1 p.m. Pacific, 4 p.m. Eastern. I just want to verify that the audio is working. All right, sounds like it's working. So wonderful. Let's get started with some housekeeping. We want to focus on some prepared content. Today will be around Roth Solo 401k. So let's see here. So one moment here. Okay, here we go. So the presentation is being provided for educational purposes only, should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So if you're on YouTube, please subscribe, please like, please share. If you're on LinkedIn, ditto. If you're on Twitter, ditto. If you subscribe on YouTube, it's great, obviously, for us to get the word out, but also you'll get notifications of all the content. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern, again at 1 p.m. Pacific, 4 p.m. Eastern. We also have a lot of prepared content that we bring. Some of it's on the lighter side, like today, we'll just spend a few minutes, maybe 10 minutes or so, talking about Roth Solo 401k. And then if you have questions or comments, we always love to engage. We appreciate the opportunity to discuss these topics. So please don't hesitate to chat over questions or topics now. And then we'll make sure to be able to get to the questions or topics you have. But if you look at, it's contribution season. So subscribe to the YouTube channel, then you get notifications of the deep dive content as well. For example, we've been going through a series of deep dive presentations regarding contributions A to Z, everything from how much you can contribute, the contribution limits, different scenarios, how to report contributions. The first presentation was on S Corps and C Corps. Last week's was on sole props, single member LLCs. The next one's around multi-member LLCs, partnerships. We're also going to be having some deep dive discussions around mega backdoor Roth. We're going to talk about the magic number. So how much money one would need to be able to maximize contributions. So there's a lot of good reasons to subscribe to the channel. So we also want to highlight some of the other resources. For example, you can participate 24/7 in our community. We go live twice a day. If you could find us on our webinar page, mysolo401k.net/webinar. You can see we post the schedule here. So if you go there and you submit your email address, then you'll get an email after we're done with a link to the recording. So that's another, here is the channel. You can subscribe here at the channel. You can see we got the upcoming streams. We've got 4 posted. If you go to the community, we also have forums where people are posting questions 24/7 in the forums. So we've got over 30,000 members, so it's pretty active over there. Okay, so let's talk about Roth Solo 401k. Let's talk about Roth Solo 401k for a moment. And again, if you have questions or topics, please don't hesitate to chat over questions or topics to discuss. All right, so we'll talk about Roth Solo 401k. So if you follow the industry, there's definitely been ebbs and flows. So for example, a lot of the discount brokerages actually used to offer Roth in the past, then they stopped offering it. But then with Secure Act 2.0, there was what they referred to as Rothification. So there's a lot of legislation that's encouraging and even mandating in some scenarios. And if you're looking down in the horizon, Roth contributions. And so I would say maybe from a policy perspective, they may like Roth because they get to tax the money now, right? But from an investor perspective, individuals, the attraction of the Roth is that, yes, you don't get to reduce your taxes now, but you have the potential for tax-free growth. So a lot of individuals and financial planners, they like that feature, that aspect of that potential for tax-free growth. So you have to have a plan that allows for Roth contributions. And then so what I want to do is I want to talk about the different ways at a high level to get money into a Roth account, right? And we're talking about really a Roth solo 401k, right? There's obviously the Roth IRA that's out there. We're not going to really spend any time on that. We're going to talk about a Roth solo 401k. So let's just really lay the foundation. So solo 401k is for a self-employed individual. So you have to be reporting earned self-employment income on your taxes, have no employees, full-time W-2 employees working for any business owned by you or a spouse, if any. If yes, you can set up a solo 401k, even if you have a W-2 job, even if you participate in your W-2 employer-sponsored plan. You don't have to have a formal legal entity. You really just have to report earned self-employment income. And that's what it gets you into the game. That's what enables you to set up a solo 401k. Now, a solo 401k is really a legal entity. It's a trust. So like any legal entity, it's the documents that create it. So our company is a 401k plan provider. So we have IRS approved documents that we use to draft a solo 401k plan for our customers' business, right? So 401ks are for businesses. Solo 401ks are for self-employed persons. So you could be a sole proprietor, right, without a formal legal entity. You're reporting earned self-employment income. You could still set up a solo 401k. So that 401k would be sponsored by your sole proprietorship, right? So what you can do with your 401k at a high level is really a function of two things, right? It's a function of the rules that are set by the statute in terms of what you can invest in, what type of contributions you can make, but also what your plan documents allow, right? So for example, the rules allow Roth contributions, mega backdoor Roth contributions, but it's not enough just that the rules allow it. You also have to have a plan that allows it, right? So back to the discount brokerages, right? Even though the rules allow Roth contributions, their plan documents don't, right? For example, Fidelity doesn't. So you have to have a plan, meaning the plan documents, like what we offer, plus what the rules allow. So our plan documents are drafted to provide maximum flexibility, both in terms of contributions, like Roth contributions, as well as investments, et cetera. And then we don't hold or have access to your money, but we're very hands-on in helping you open up an account at the bank or brokerage of choice. So even though Fidelity, for example, doesn't offer a plan that allows for Roth contributions, you can still open up an account at Fidelity. And then if you're going to make these different types of contributions, like pre-tax versus Roth versus after-tax, they need to be held in separate accounts. It doesn't mean you have different plans. You just still have one plan that allows for the different types of contributions. But because of the rules, you have to keep those funds in different accounts. So Roth is one type of contribution. Pre-tax is another. Then there's also what they call voluntary after-tax, which is how one makes mega backdoor Roth contributions. So if the goal is to maximize the funds in your Roth solo 401k, let's talk about the different ways to get money in there. So one way is contributions. Another way is taking funds that are already in your solo 401k or another retirement account, but they're in a pre-tax status, and then converting them to a Roth status. So let's first knock out that way, which is what's called an in-plan Roth conversion. And here's a good page on our website. We really give a deep dive overview of it. But you could either have money that's already in your solo 401k that's in a pre-tax status, and then you move it to the Roth account, or you might have pre-tax money in a different retirement account that you roll over to the solo 401k, and then you convert it. So If you want to take money that's outside of the solo 401k to a different retirement account, it has to be eligible to be rolled over, like a former employer plan or a non-Roth IRA. You can't transfer a Roth IRA to any type of 401k, including a solo 401k, but you could transfer pre-tax or Roth money from a former employer plan. Obviously, if we're talking about in-plan conversions, so we're talking about pre-tax money. So let's say you have pre-tax money in an IRA, pre-tax money in a former employer plan. You typically can't transfer money from a current employer plan until you leave your job, unless you've met a triggering event, like you're over age 59 and a half. But let's say you have money in a former employer plan plus money in a traditional IRA. So that money can be rolled over to the solo 401k. So it would go into the pre-tax solo 401k sub account. So that's a two-step process, right? That first step is it's reportable by the administrator of your other retirement account, like your former employer plan or your IRA, but it's not taxable because it's just a direct rollover to your new 401k, your solo 401k, sponsored by your self-employed business. So we go like to like, so pre-tax to pre-tax. Now, once it's in the solo 401k, you could then move it to the Roth account. So this next step is going to be the same, whether we're talking about moving money that you already have or you move money that's from another retirement account to your pre-tax solo 401k. Because the point is now you have money in your pre-tax solo 401k, you want to move it to the Roth solo 401k. So there's no eligibility requirement. Anybody can move. Anybody that has a solo 401k with us can move as much or as little as they want from the pre-tax solo 401k to the Roth solo 401k. Now that's going to be taxable. It's also going to be reportable. So we handle the reporting. It has to be reported on a 1099-R. We handle that as an optional free service for our customers. Customers just give us the information we need to prepare that 1099-R. It's going to be taxable for the year of the transfer. So if you move it in 2025 to the Roth solo 401k, it'll be taxable on your 2025 income tax return. And then going forward, you'd have the potential for tax-free growth, meaning once you finally move the money or withdraw the money out of your solo 401k, if you withdraw it as a taxable distribution, if you withdraw it as a distribution to your personal account, it won't be taxable as long as when you withdraw it, you're at least 59 and a half years of age and you've had the account for 5 years. So it's good. That's why I say it's the potential for tax-free growth. Because if you make what's called a qualified Roth distribution, you've had the account for at least 5 years, the Roth account, and you're at least 59 and a half years of age, all those subsequent gains that accrued in that Roth solo 401k account are going to be tax-free. So that's the benefit of the Roth solo 401k. So now let's talk about the other way to get money in your Roth solo 401k, which is a contribution. So a contribution is where you take money that's non-retirement money and you deposit it into your 401k. So it's like a savings plan, right? So the typical traditional way to contribute to a 401k is on a pre-tax basis, right? Where the individual reduces their taxable income. But it's also possible with our plan to make Roth and mega backdoor Roth contributions. Both of those contributions are made on an after-tax basis. So one is not reducing their taxable income for the year for which they make the contribution, but it's going into that Roth account ultimately. So that's where you have that potential for tax-free growth. So the first type is Roth employee contributions. For example, for 2025, the limit is 100% of the self-employment compensation up to $23,500, dollar for dollar, plus an additional $7,500 if you're 50 or older, plus an additional $11,250 if you're age 60 to 63. That's assuming that the individual has the income to justify it, the self-employment income, and has not made any other contributions to another plan like a day job plan, because that employee limit applies at the employee level. So those employee solo 401k contributions can be made on a Roth basis. It would be deposited directly to the Roth account. The other type is mega backdoor Roth. So there, you have to have a plan like ours that allows for voluntary after-tax contributions. Those are technically a different type of contribution, so they have to go into a different type of a different account, an after-tax account. And then you can move the money from the after-tax account to the Roth account. Now, individuals make those contributions or want to make those contributions because the after-tax limit is higher than that employee limit. So you can contribute, for example, 100% of the self-employment compensation up to the overall limit, which is $70,000 for 2025 as a voluntary after-tax contribution. So let's say, for example, the individual is under 50 years of age. They have $80,000 of W-2 wages from their business tax as an S Corp. They don't make contributions to another plan like a day job plan. They could contribute $23,500 as a Roth employee contribution, and then they could contribute the difference up to $70,000 as an after-tax. It would first go into a separate after-tax account before it gets moved over to the Roth account. So at the end of the day, they'll end up with $70,000 in their Roth solo 401k. So that's the other way, is contributions. And then you've got those different types, whether it's Roth employee or the mega backdoor Roth. Technically, you can also make employer contributions as Roth contributions. But in our experience with our clients, they really don't do that because they already had the ability to make mega backdoor Roth contributions. The contribution limit for after-tax contributions is 100% of the self-employment compensation, whereas the employer contribution limit, if you're trying to make employer contributions as Roth contributions, is a percentage. So you would need much more self-employment income to justify the same contribution, right? Because it's, for example, 25% of W-2 wages, for example, for a business tax as an S Corp, or 20% of self-employment compensation, for example, for a business tax as a sole proprietorship. So among other reasons, that would be a reason why most folks in our experience would just skip making employer contributions as Roth contributions if they're trying to maximize the funds that ultimately are contributed and end up in that Roth solo 401k account. And instead, they would choose to just make the contributions as voluntary after-tax contributions and then move those over to the Roth solo 401k account. All right. So and I see the good question. We try to keep this educational, not so much about account-specific issues, but we'll shoot you, I'm tagging you here. We'll shoot you an email after we're done regarding the Rob's question. Rob's questions are great. We're happy to field Rob's questions. Let me see here. Let me just grab your account real quick. All right, perfect. Thank you for participating and jumping on, though. We appreciate it. So we'll follow up with you right after this call. So if you got a 1099-R in connection with your 401k business financing plan, I'm presuming you're referring to the 1099-R that would have been received when you rolled money over from another retirement account to the 401k. So that should have a code G in box 7 to report that as a non-taxable direct rollover. You could check that. We will ask for a copy of that as part of the Rob's annual reporting process. It would also be prudent to share that with your tax advisor. So just to answer that question, just because that's a good educational question. Thank you for bringing it. Okay, next question. I had a question regarding after-tax contributions to a solo 401k. I have stable contracts that guarantee me $100,000 in W-2 wages for my S Corp each year. Is it illegal to make an after-tax contribution before I technically earn the income if I'm guaranteed to earn it? So it is not. It is certainly possible, for example, to start making 2025 contributions now that we're in 2025. The individuals just want to be sure that they will have the self-employment income to justify that contribution, so they don't end up in an excess contribution scenario. So you don't have to wait till you've actually received your W-2, for example. As long as you're 100% confident you will have the self-employment income to justify that contribution, then it would be acceptable to, you can make a reasonable decision to proceed and go ahead and make that. I have a question about Roth solo 401k qualification. A sole proprietor LLC taxed as a C corp, engaging in owner's personal fund trading, pays W-2 regularly. Is this qualified solo 401k? Well, you have to have earned self-employment income. So W-2 wages from an individual's S corp or C corp, where they're the, for example, the 100% owner, that's going to qualify as active earned self-employment income. Thank you for the good questions. Regarding mega backdoor Roths, if I convert all my solo 401k after-tax contributions to a Roth every year, will I ever need to file a Form 5500? Well, the no, assuming that the value of the plan is always less than $250,000, including any defined benefit plan that the individual might also have. Good questions. Thank you so much for the participation. We'll give it a moment to see if there's any more questions that come through. No, it doesn't include Roth IRA accounts. It's only the solo 401k accounts, assets, all sub accounts. If there's multiple participants, like a husband and wife, all the solo 401k accounts are aggregated for purposes of determining whether the threshold has been met. And the individual would also need to include the value of any defined benefit plan that the individual's business might also be sponsoring, for example. All right. Well, it looks like that takes us to the end of the presentation for today, the questions. We'll be back at 1 p.m. Pacific, 4 p.m. Eastern. Please subscribe to the YouTube channel for notifications. Just hit the notification bell so you can jump on these webinars anytime. You'll also get notifications of the deep dive content that we're bringing. So we appreciate the chance to discuss these topics. Until next time.